Brian, do you want to talk about inflation? Are you cool with that?
Yeah, we can talk about
All
inflation.
right, we're going to talk about inflation. So, Mo has a question about
Okay.
this. He says, inflation came out today a little bit hotter than expected, which means the Fed might have to raise rates more than markets thought. How should financial mutants think about this? And are there any action items?
Yeah, I saw the data come out this morning. Here's the thing, I think, and I'll be curious to see how the Federal Reserve kind of positions themselves after this, because look, I think that don't get caught up in the news cycle because look, every talking head on all the financial channels will be jibber jabbering about this, but the reality is everything is a laggard. Has a lag to it. So it doesn't mean just because inflation's up 0.5% that we are back to wide open again, because it sure doesn't feel that way. I mean, I've been dealing with a number of phone calls with clients who have been reduction in force, especially if you're in the tech field. All the extroverts of a bad economy are kind of hanging out together right now. You don't see real estate running wide open anymore. It seems like if you need a used car, you can get a used car again. There's a lot of things out there, and I'm sure that the Federal Reserve is going to be taking that into account as well. So I don't know that this necessarily blows up everything, because we had been getting some positive indicators that inflation was under check, and hopefully, and even the Federal Reserve has acknowledged it, because we went from those huge 75 basis points bumps to now we're only getting 0.25% increase. So that they're even indicating, hey, it looks like what we've been doing has been working. But here's the big thing. That's noise. Now, yes, it has an impact on your cash reserves, and I would encourage you, make sure you're looking at online savings accounts or even your online brokerage accounts. You can easily get 3.5 to 4.5% on your cash reserves. That is impacted by inflation. But your long-term money, the money that you don't need to be touching or even thinking about for 7 years and beyond, that doesn't matter. I mean, and that's why I want you to stay the course. Don't try to feel like you have to change a lot of your allocation and other things, especially if you're 20 years, 30 years, 40 years from retirement. This is just going to be another moment in time that I don't want you to lose focus on the why and what you're trying to build assets for. But short-term stuff, like I said, I just did a show on credit card rates are at all-time highs right now. Your savings are actually making cash is not trash right now. That stuff is impacted by inflation, but long-term financial decisions, things that are going to go into the financial order of operations, that's going to be minor decisions. Your life changes and needs are more important than indicators like just inflation.
That was good advice. Yeah, thanks for your question, Mo. A very timely question. And I like when you kind of bring us back, Brian. You're like, hey, stay the course. That's why we share the knowledge that we do, so that hopefully you have a good plan and you can feel like you're okay, even when things like that happen.